Let's shift focus to the commodity markets now. Manisha Gupta is joining in. Manisha, what's the one commodity that you're tracking today?
Sonia, thank you. I'm looking at the crude oil prices, and good news clearly for India, as we are the major importers and consumers of crude as well. And we have seen the prices come off the way they were going up as well. So it's a fourth straight day of decline for the crude oil prices. We are trading at a 2-week lows, and 5% down in 1 week itself is how the prices seem to be really working with. There are a lot of factors which are weighing onto the markets right now. To begin with, it has to do with the dollar index, which has continued to gain for the last 4 weeks, and it's trading at a 6-week highs right now. Apart from that, it also has to do with the US Fed policy minutes that came in yesterday, which are signaling more rate hikes ahead, and that's weighed on across asset classes. The market's also looking at the Chinese economic numbers. All of that data, information coming in from China is weighing on. So the China Trust Fund says that they missed payments on investment products. So the real estate is an area where China continues to stay a laggard. But apart from that as well, whether it has been about home prices, trade data, investments, manufacturing, retail sales, every number that came out of China for the month of July on a month-on-month and year-on-year basis has been on the weaker side. And even as China has cut the key policy rates for the second time in 3 months, markets still are waiting for a big bang stimulus measure or some meaningful big stimulus measure to come in for the property there. Apart from that, the markets also are looking at the US production, which has continued to run up. The US production now at a 3-year highs of 12.7 million barrels per day. The market has been anticipating or estimating that 12.8 million barrels per day of an average is what you could see 2023 hit as well. Now, this is very close to the all-time high that we saw in 2020 at 13.1 million barrels per day. Not too far away from that, and that is what is bothering the street. So even as the OPEC and allies and Russia has been cutting output, with the US output increasing and near all-time highs, the all concern about tightness perhaps in this quarter and the next quarter seems to be easing away, and that's weighing onto the prices also. Is the reason, even as we saw the prices gain up all the way from $65 in the month of May to around $87 in the month of August, we seem to be just about holding 82 or 83 right now. So profit taking clearly coming in for this space.
All right, Manisha, thanks a lot for that. Well, moving